Thank you for checking out Fieldman Rolapp Associates' 34th posting of the Municipal Market Update, otherwise known as MMU. It is the week of March 21st. I'm recording this on March 22nd. Some of the data has changed a bit over the last day and a half, and I'll try to highlight that. But it certainly has been a difficult market for municipal issuers. We are recording this from Kauai. We have some projects out here. And so this is the first MMU recorded in Hawaii. On our page here, where we highlight interest rates on the far left, and when I say interest rates, I'm talking about the AAA MMD. The AAA is the highest rating an issuer can receive. The MMD is municipal market data. And what the gray lines represent to the far left are interest rates, at the bottom are years. And what the gray lines represent are the range of interest rates going back to 2005. And then what that red line represents is the MMD for each one of those maturities on 3/18/2022. For a good portion of the MMUs that I've recorded or posted, that red line was scraping the bottom of these gray bars, meaning rates were at or near historic lows. A lot has changed, and let's talk about some of those things that have changed. The conflict in Ukraine, I think, certainly has investors concerned. Inflation continues to be a concern. I think for many years, viewed 2% as high. And I think now you're seeing data come in that we're over 7%. So very high inflation levels. We're also seeing the FOMC increase interest rates, or at least the overnight rate. They did that. It went to a tune of 25 basis points at the last meeting, so 0.25%. And then there was a note that the FOMC chair said that we might have a 50 basis point or 0.5% increase at one of their upcoming meetings. So I think investors are adjusting to that, and to kind of put some of that in perspective, that's what this chart does, is investors have anticipated higher rates, anticipated kind of needing more return on their investment to loan money. And you've seen this red line lift off the historic lows. We still are what appears to be in the lower realm of interest rates, where we're not kind of above that, what looks like that 50% mark. So we still have low interest rates. They just aren't anywhere near as low as they were through many of the periods that we've been doing the MMU postings. And so this is a chart where we try to show you how that MMD changes over time. And if you look at that red line, that's 5 years ago. And you see how that slope to it. So investors, the longer you go out, the more they charge to invest, very typical. And then you see that 1 year has a very similar line to that as well, just lower. And that was last year. And then look at that green line, that 2022. So for the shorter term rates, they've gone up. And then the long-term rates haven't gone up to that same degree. And so you have a real flattening of the yield curve. If you do a few Google searches, there's all sorts of thoughts on that. Some view it as if the 10 and the 10-year treasury are close to each other, that's a sign of a recession. So there's all sorts of thoughts on that. And you can certainly do more research on that away from this. But we do have a flattening of the yield curve. Okay, I've talked to you about supply and demand. This is the demand for municipal bonds for a lot of the investors. And the red bars represent money flowing into the municipal bond funds, and the red bars represent money flowing out of municipal bond funds. And what you're probably noticing is we've had some dramatic red bars right when COVID was first realized that it was here. And then now we've had some red bars in recent weeks. And so this is investors saying at these yields, we no longer want to be in municipal bonds. And so they are moving their money elsewhere, which then, depending on how much cash those funds have on hand, they may or may not need to actually sell bonds. So instead of being buyers, they might actually be selling bonds in the secondary market. And so you can start to see this demand a lot lower than it has been. So this slide shows you the volume of debt issuance. And we've been on a little bit of lighter side. It's that light green line that represents 2022, which you can see that dotted red and black lines for 21 and 20. We're below those. But we also hopefully are noticing is we are somewhat elevated in the last 3 weeks. So I'm not sure if issuers are looking up saying we're in a rising interest rate environment, let's get our bonds sold, if it's just kind of a coincidence that that's happening. So we want to monitor this, because to the extent that there's a lot of volume and less investors, that puts more pressure on interest rates. Well, we'll want to monitor this and also compare that to the outflows. So the S&P 500 is another item that we started tracking here on MMU. It's another option for investors to invest in, but also just kind of gives a sentiment for how investors may be viewing the economy as a whole with all the things that are going on in the market. The S&P 500 makes up of the top 500 companies within the United States. And so you probably are noticing a bit of a downward trend here, and we'll continue to monitor that. But it feels like we've also seen some pretty big swings in the S&P 500. So I've talked a bit about inflation, and you've seen this slide, but if you look at that average CPI of 2.6%, and then just go to the far right of that chart, anytime you see a dramatic change like that, that is going to cause investors some concern. And so here, you know, an important thing to understand about inflation is, to the extent a bond investor buys a fixed rate bond, to the extent that there's inflation, it really erodes their return. And so here you're seeing that, and that this may be one contributing factor to why investors are requiring more yield when they are lending. Wanted to give you some perspective on kind of how much things have changed and just kind of how quickly they've changed. So we have that 10-year MMD there to the far left, and then kind of if it has brackets around it, that means it went down that week. And then the 10-year Treasury, same kind of bracketed type thing. So if you go down to the very bottom, so just start at the top, you know, 1/2/2020, 10-year Treasury is at 1.88. Then it went as low as on 4/1/2020 as to 0.62. Then kind of bounces around, but then gets closer to 1% for a good balance of time there. And then finally, if you go to 3/18/2022, we're at 2.14. That seems like a lot already, but when I was preparing for this morning, I pulled up the 10-year Treasury, and it's now at 2.373%. So continues to go up quite a bit. We are well above that 2.14 mark at the end of last week. So items to follow as we're looking at economic events here. You can see here are the items that are between now and the end of the month. So I encourage you to watch these. As I've told you in the past, to the extent that these come in dramatically different than expected, then that could have impacts on the market. I think many folks will be watching the housing market and how that's performing now that interest rates are higher. So thank you for your time. Really appreciate all of those who continue to watch the MMU. Any feedback you have for me, I would appreciate. Here are our registered municipal advisors. I encourage you to reach out to any one of them and seek additional information. I'll see you in 2 weeks. And once again, thank you for your time.